Welcome to the Mortgage Rate Weekly Market Update for the week of April 2nd, 2018. Hello, I'm John Thomas with Prime Residential Mortgage, here to give you an update. Well, last week we finally saw mortgage bonds break above their 25-day moving average. Take a look at the bond chart on the screen. You can see since the beginning of January, mortgage bonds have been selling off, and then in early February, they've been stuck in this sideways trading panel, unable to break out or below. So mortgage rates have stayed pretty constant for the most part since middle of February. But on last week, they were finally able to break above their 25-day moving average, which is a great technical sign. We're able to rally higher. So with that in mind, we're hoping that mortgage bonds can break this downward pattern and move upward. So we're going to recommend floating your mortgage rate to see if mortgage bonds can rally from breaking above the 25-day moving average and hopefully move interest rates lower. But if mortgage bonds fall below the 25-day moving average, that would be a bad technical signal. We quickly switch it to a locking stance because it's the first time they broke above in a long time. If they cannot stay above it, bad news. They're going to continue to sell off in mortgage bonds, which would increase mortgage interest rates further. Now, if we dig into the economic news, we had the final reading of the fourth quarter of gross domestic product for 2017. Came in at 2.9%. That's a drop from 3.2% in the third quarter, and also a drop from the second quarter of 3.1%. Overall, 2.9% is a good reading because 3% is a healthy economy. So that's a great reading there. We'll have to see how the first quarter of 2018 comes in. Consumer spending is the major driver in the U.S. economy, and the good news in this report showed that consumer spending rose 0.4% in the fourth quarter. So that could signal that we could get a good, strong GDP in the first quarter of this year. So we'll keep an eye on that. Then we saw inflation. Consumer inflation remained low in February. We saw the personal consumption expenditures report come out, the PCE. The core was up 0.2% from January, and year over year, it was up 1.6%. That's well below the Fed Reserve's target of 2%. So inflation still remains low. Low inflation is good for mortgage bonds, which means it's good for mortgage rates. So we'll continue to watch that. Then we saw weekly initial jobless claims come out on Thursday. Claims dropped 13,000 claims down to 215,000 claims for the week. And the previous week was revised lower from 230 to 227,000. And that's important because the 227,000 is going to be used in the jobs report for March as the sample week. That report comes out this Friday. So we're looking for a very strong March jobs report, so keep an eye on that. That could be bad news for mortgage bonds. So as we get closer to the end of the week, we may switch to a locking stance, so stay updated on that. Now in housing news, housing still doing very strong. We saw the Case-Shiller 20-City Price Home Index released for January 2018. Home prices rose 6.4% from the previous year of January 2017. That low inventory continues to push home prices up. Home prices were up 0.8% from December 2017 to January, and the inventory of homes for sale is the lowest on record at 3 to 4 months supply. A healthy market is 6 months. So low inventory is pushing home prices up. We do not see an end for the low inventory anytime soon, so we're expecting home prices to continue to rise throughout the year. Then we saw a National Flood Insurance Program announced a rate increase effective April 1st, 2018. The average premium for flood insurance is increasing by 6.9%. So if we look at the average premium rate across the country for standard flood insurance, it's $994. That would go up to $1,062. For the average premium across the country. So that increase is effective April 1st. So if you have flood insurance, you're going to see an increase in your premium. Now on the local news, we got the next free first-time homebuyer seminar this Saturday, April 7th from 10 a.m. to noon in Dover, Delaware at the Dover Holiday Inn. And then we are in Wilmington, Delaware on Wednesday, April 18th from 6 to 8 p.m. at Independence Small at EXP Realty Office. And then we are in Newark again on Saturday, April 21st from 10 a.m. to noon at the Christiana Hilton in Newark, Delaware. You can register for either one of those events. Give us a call in the office at 302-703-0727 or online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.